Welcome everyone. This is a Viper Professional Training and Support webinar. Today's date is October 26, 2019, and this is a Saturday morning webinar. The title of today's webinar is Using Object Trader Region to Scale, Exit, and Your Stops. You can use anything to do with Object Trader, of course, and we're going to go over that. And as everyone knows who's been to our webinars or our live trading room, everything that we say and do at Viper Trading Systems is for educational purposes only. Futures trading, forex trading, any kind of financial instruments trading involves risk. Therefore, there's always risk of loss. You should only trade discretionary capital, and that is money that you can afford to lose. Nothing said in this webinar, other webinars we have, our live trading room, or anything else with Viper Trading Systems should ever be construed as trading or investment advice. And as always, everyone does trade at their own sole discretion. Any questions on the disclaimer? If not, we're going to go ahead and get started. And Louis, we'll talk about some fibs, and let's see, Kenneth saying, can you spend a little bit of time on loss limits and daily profits? Okay. You mean, Kenneth, on how to set the profits on Object Trader, or just to go for a certain amount and quit for the day? Go ahead and type that in and we'll go over that. All right, let's go ahead and go to a chart first off. What I want to show everybody, and this may be, fairly basic to some traders that have been around a while, but one thing I want everybody to realize, unless you get, for instance, let's say that you were trading in this phantom area and you get a nice thrust up, and this actually takes out this swing over here to the left. So you can take this next mid-band trade, okay? But when you double top on a, where they don't even take out the top, be very careful with this next mid-band trade, okay? Because they usually go deeper. Okay, that's something that you're going to see time and time again, and it works on the opposite side of it too. Okay, and of course there's a lot of traders that actually, when they see a double top, they box it in and take a short, which you can do. But the one thing that we're about at Viper Trading Systems, we are retrace traders in the direction of the trend. And one thing also to be very conscious of is, as you're watching this mid-band, as it's stair-stepping, okay, even when it flattens up, it's still stair-stepping. Notice that it's stair-step from this level to this one. Be very careful taking shorts against that, because, that's when you'll get hurt, okay? And, if you don't even want to ever take a mid-band trade, take only the ones that come down below the mid-band, on a long and vice versa on a short. And you'll miss some trades, I'll promise you that. But there'll be times that, you'll be glad that you did miss certain trades. Because let me show you something here just to give an example. All right, let's see, this double topped right here, okay? So let's say that you were looking at this trade right here, and you're seeing it come down to support. You're saying, okay, this looks like a pretty good mid-band trade, right? Okay. But remember what I just said about double tops. You want to be very, very careful with a trade like that. Okay, so if you did take it, and you draw your line, for instance, right here, and they go down below it and they come back up through it, you can go ahead and take that trade, but realize that if you do, that it's not necessarily going to go your way for very long. And that's one thing about mid-band trades that's, a little bit difficult for some people, simply because you find that, you take one and then, that particular trade doesn't go your way, and then you hold on to it instead of getting out of it. So let's say that you for instance, I don't know, maybe you got in right here when it took out resistance, or you might have gotten in on the bar closed one of these, just simply because it was under mid-band, or if you just tagged the mid-band trade at 1504.50. But see, this went up to 1504.90, and it went up to 1505 about 10, and then it went up to about 1505, and then it went up a little higher, and then it took you out. Okay, so if you took a trade like this, this is not a trade that you made any money on. Okay, but you also don't have to lose a lot of money on that. For instance, if you got in on let's say that you got in at 1504.60 or 1504.50, where this mid-band is, then, the moment that it comes back through it, take your coin off the table, okay? Because you don't have to hold with this swing down here when you got in here. If a trade's going to work your way, just like this predictor trade here, for instance, you box this in, or you do this little 3 candle here and you take that trade on that bar. Well, that trade actually worked, okay? And it never really went against you, okay? But this trade went against you right here. And this is the area, I think here, I talked to, quite a few people during the day and things like that. And keep in mind that at the open of the market is a little different than just trading during the day, because, well, at the open of the market, they tend to have pretty decent moves, like the open of oil, to give an example. Now, this particular Friday, we didn't have great moves on crude oil, but we did nail a few. Okay. So does everybody understand that? What you want to do on that is you want to be real careful. And also, if you happen to get in a trade, be sure and, diagnose, for instance, your fib and see where it might be. For instance, on this one, that's a 61% right there. You could actually get in on this bar instead, because this is definitely an uptrend. And if you happen to grab the 61%, you could be in on that bar right there. And then you didn't really feel the heat, and you ended up making a little bit of money, maybe. This may have still been a scratch, depends on where you got filled. Okay, but don't let a trade that starts out to be good and then rolls over be all the way down and think, hey, this is going to be a great trade. Now, if you've got the money in your account and you get in a trade at mid-band and you want to hold it literally all the way through a phantom, well, that's like a 24 tick stop. Now, in a case like this, it actually worked, but if you're doing multiple contracts, that can be, deadly to your account for sure. Okay, because, let's say that you got in like 2 contracts right here, and you're up maybe $80 or $100, and then it's right back in your face. And then instead of being up, $100, you're going to be down closer to probably 250 right here. It looks like about 12 ticks, 10 ticks anyway. And that's a decent pullback before it goes your way, but you didn't know that it was not going to go all the way down and check some of these lower lows. Okay, so one thing, it doesn't cost that much to get out of a trade. And also remember, when you get into a trade, and just like Louis was asking about just a few minutes ago, take a look at your fibs, because on a lot of runs, they will go ahead and do these 50 and 61%, fib retracements. Let's see, in this case, because of double top, and if it wasn't double top, would it have been more beneficial? Well, this being a double top, you want to always be careful with mid-band trades on double top, because what's the rule on identified lightning? Anybody? What would your rule be on identified lightning? Okay, if you were looking at lightning 3, all right, you have a high, you have a low, you have a much higher high. Is that lightning 3 identified? So if it's not identified, what do? Well, this is identified, okay? So they're not going to take that out, or they're going to head down, but they can darn sure take that one out. And they usually do, and that's what you end up getting. Okay, so be sure and check your fibs in a situation like that. And if you're a gutsy type trader and you want to try to short something like this, when it double tops, knowing that as a rule, when they double top, they will take out this low, you've usually got at least down to here to get some coin, and usually lower than that, because this is not identified, so they take it out. Now, was this a higher low than this? See here? That was 1503.10, and that's 1503.40. So this is telling you that this is still heading up. This low, this high, this low, and probably another high, see? Like that. Okay? Now, one thing about, just real quick on Louis' question on fibs, though, the problem that I see personally with Fibonacci's is that you know, you may be holding for something thinking that it's going to stop at 61, and it just blows right through it too. You know, for instance, on this trade here, let's see what the fib was on this one. See, this looks like 50, and it didn't quite come to 50, okay? But it was a phantom type trade, okay? So, you know, that particular trade basically bounced off of 38.2 and went up at least 10 or 12 ticks. It bounced off of 50% and went up quite a bit more, but it didn't quite touch 50. So see, you can't totally rely on fibs to be exact, you know, because there's fading going on. You know, they faded that by about 3 ticks. You know, what was the fib from down here, to give an example, on that same one? It was not 38%, was it? So, you know, that's why we don't really use fibs as much as we use our phantom and our mid-band and patterns. You know, a lots and lots of patterns. You're going to see these type of trades over and over and over. And, you know, for instance, if they double top like this, you know, be careful of that mid-band trade. You know, this one double topped right here, see, but that was a decent mid-band trade. Okay. Everybody see what I'm talking about there? So if you do get a double top, you know, if you want to take a mid-band type trade, take it when it, you know, crosses mid-band, just like we talked about. And if it goes against you, get out. This one crossed mid-band and, you know, touched mid-band and went back above it, and you got a nice 10-tick trade. Okay, got that? All right. Now, let's say that you were up at this time of morning. This was on the 25th, which was yesterday. And you decide that you want to start trading this chart right now. Okay. Now, what do you do? Well, first off, you're going to mark on your charts, right? And this webinar will be a little bit even on about looking left to trade the right, simply because if you look to the left right now on this chart, that's your swing and that's your swing. Okay, that's on your immediate left. They like the Lightning 3 really quite well. Okay, predictors will also be in the picture, but you also have to look and say, okay, if they break this resistance here, and they did, you got to draw another line even in this area here. Okay, so if they do happen to shoot up above that, then couldn't they actually just pull back into it and very possibly give you a decent trade, right? And the answer is yes on that. So how would you trade this particular trade? Anybody? You'd have to wait for it to at least quit stair-stepping down, which it's actually doing right now with Lightning 1 anyway. See it? High, low, lower, high, little lower, low. But let's just play it and see. I want y'all to tell me when you get in this trade. Now remember, we're not thrust traders, so we're not going to get this thing on a thrust. Line 6 maybe? Looking to the left to trade the right. You could also see a swing right across here. See this little thrust, retrace thrust. You could draw a third line. Like so. And if you weren't already in this trade right now, then you'd be looking for some type of a pullback, right? But let's see if we get something. Or you got to wait till it actually literally thrusts again and gives you another chance. Okay, could you box this trade in even like this? You know, you hear a lot of times Charles will be in a trade that, let's say that this was 8 o'clock in the morning for us and this is 8:30 for Charles, but he's seeing this trade and he's saying, you know what, this doesn't look too bad to me. You know, could this be a decent trade? What says the team? What do y'all think? What would you do in this case right here? Let's see, is there a good way to use the rate of change? Chuck, not really that I'm aware of on that. Now realize that when predictor draws, you'd like for it to come actually on top of this predictor because this is where it's saying it's going to go. Okay. But what if it bounces right here? You know, we do take retrace trades, and this is a retrace trade. So how would you take this particular trade? It's kissing stealth right now. It's kissing a support level right now. It kissed this one, and it's trying to kiss this one. Now, if I was to take that trade right there like that, with that bar trying to head up a little bit like that, I would probably put my stop nice and tight. You know, just in case this is not going to be a trade that's going to work out. Okay, bar close up, or if it kind of pushes itself up, I'll grab a trade in first thing in the morning like that if I just see it trying to close that bar up. You know, and a lot of times you'll end up getting taken on a trade like this because, you know, they're going to come down more than likely. Let me show you real quick. More than likely, they're going to come down to this area right in through here as a rule, right here where they kind of bust it up. But if they don't, you know, you've got to be willing to, you know, at least take a shot at a trade and see if you can get a decent trade, right? So to me, if this bar closed up, you know, fully closed up, I would probably take it, just turn on, you know, bar close. But I don't think I'd take it with multiple contracts. Let's see, 1506 has not been tested yet. Well, it's not testing 1506 yet, but it is testing the swing to the left right over here. It's already taken this one out. It's testing this one right now as we speak. And it may not go to that one. You just don't know. But, you know, looking to the left to trade the right, you'll find a lot of times they'll go to the first or the second one. And that's why the two lines as a rule will work. Now, I love to have predictor also, but if I was to be looking for this trade like this, I would more than likely go ahead and take it if that bar popped up. But I would not give them any wiggle room on it. Because one thing about a $5 commission with Top Step or even your own account, 338 or so with NinjaTrader, you know, that's not bad. But, you know, would you hold this trade all the way to here? There's your swing. No, because see, that'd be way down there, 15 ticks low. Now, if you want to try to go for gusto type trades and you really think this is going up, guess where you can put your stop? Now, I'm not advocating this, but if you said, you know what, this is an uptrend, and it's obviously an uptrend, thrust, retrace, thrust, right there. But look how much of a stop that would be. Now, I'm not talking about doing that, okay, because we do more minor type stuff. But, you know, for instance, if you had like a micro account with gold, you know, that wouldn't be a huge bunch of money against you at, you know, basically $1 a tick, right? If you were trying to ride the overall trend. But I'm still not saying to do that, okay? But if you notice what happens with these markets is they stay inside this area that we have. You know, they'll thrust, they'll retrace phantom, they'll thrust, they'll retrace to phantom, they'll thrust, they'll retrace to phantoms or close to it, and they'll thrust again. And, you know, again, though, that would be like buying at the highest it is and then putting your stop at the lowest that it's been. And like I say, I'm not advocating that at all. Let's see if we can get this trade. We might get it. Watch it kick us first thing out of the deal. We'll find out. We'll put a nice tight stop on it if it does. Okay, we're in. I'm going to take a chance that this thing is not going to go down even through that line 6. Now that's risking $60, but that did bounce off of a support level. Okay, now if what I'd normally do in a case like this, you might even go ahead and draw like a region. We're getting a little late, but let's just say if that closes above that, we'll add one. Let's see if that works. Now I've got this on exit on close. and we're still okay. Okay, now notice how tight that I actually kept that stop, because I looked to the left and I traded the right. I saw this swing here, those are identical, and then I saw this one here, thrust, retrace, thrust, and then the next one was either here or here. Okay, and like I say, I usually like to draw 2 or 3 at the max, and I would have a line drawn here, I'd have the line drawn here, and I'd have the line drawn here. And you'll find that even the next day that this will more than likely be something that'll work out. Now, what if you're not quite that gutsy, okay, and you're thinking, wow, this is a thrust, all right, then you're going to have to wait for a thrust and a pullback if it's going to happen. Let's see what happens. We'll just let it do its thing. We won't even move those targets. I don't care. Now we're at break even. Now, I'd be out of this trade by now, but anyway. Now, let's say that you weren't in this trade as of yet. Does anybody see where this actually came down and tried to check, and it checked this predictor right here? All right, let's get out of the trade though. Let's see if we can diagnose this chart again. Look to the left to trade the right. Where do you see? Okay, they busted up, they pulled back a little bit. They busted up. Okay, we're going to draw some lines on the chart. It's already checked that. And where's our next one? Let me see just one sec. I'm not going to put that there. Okay. Let's go ahead and pull this into looking to the left to trade the right. Swing right there that they've already checked. So really just right in through here is another one. So they haven't checked this one here. They did check this one right here. Okay. So let's see if everybody can get a little trade here. Let's see if it tags our line. We drew on our chart looking at our 2 lines. Where would you have gotten out of the long, Jonathan? Well, what I personally like to do, and I don't like mid-band pullbacks on trades, but you know, keep in mind you could run a runner. Let's say, for instance, if you were in this thing from up here, where we happen to get up at like 1 o'clock in the morning, say, okay, you could still be riding a runner if you want to be. You know, let your runner just run. But you could also, if it comes down to your line that you want to get in that they haven't checked yet, then you could even add. Okay, but if you're getting out on lightning, I would get out like this. Let's draw lightning 1. See, basically here, when this happened, okay, here, that was a identified swing, right? I'll just draw a regular line underneath it. All right, and then it goes up, no identified swing yet. No identified swing yet. And there's an identified swing right there even, okay? So that's an identified swing now. Here, obviously. And then this is an identified swing here. And this is even an identified swing here. So what you can do in a case like that is just draw, you know, see it in your mind. You can turn on the trail stop too. But as this continues heading up, just keep moving your identified swing. Should have done it with a line, but let's do it like that. See, that's your identified swing right there. And they actually took it out. Okay, so you could get out right there if you wanted to. Because when it takes out a true identified swing on the left, they're usually going deeper, like to mid-band or something like that. Anytime they break micro, as a rule, they will go down and check these. Because what you're doing is you're looking at 3 trends on your chart. You have your lightning 1s, lightning 2s, and then your lightning 3. Okay, or your thrust retrace like back in the mid-bands or even in this line 2 area. Remember, your trades are always going to be, look at that, it hit it exactly. We didn't get it, but it hit it. Let's go ahead and take it if it takes out that swing. Notice how drawing on your chart will pay off though, because it really does. All right. Matter of fact, let's see, looking left, high, low. Now also look at, instead of just your lightning one, look at this too. See, you have a high, low, higher, high. So this is like an identified swing over here as far as, a little bit more of a move. This is like your little zigzag, and this is a little bit more of a thrust, retrace, thrust. So they can't take this out if they're going to continue to the upside. Okay. So in a case like this, if I was up nicely, I would probably just go ahead and buy that and put the stop underneath there. If I had missed that one, like let's say that I got up and I just missed that by 3 bars, I would probably take a chance at it and looking to the left, thrust, retrace, thrust, I put my stop right underneath that swing. Everybody see what I'm doing here? This is like lightning one, but this is more like what's actually going on as far as the thrust is concerned. Thrust, retrace, and then thrust again. Okay. So that's basically like your true support on a little bit. And matter of fact, I'll bet that gets a numbered swing. It may not, because it got this one here, so I doubt if that one ever got it. But that's still a swing to me. Okay? And I would more than likely even do something like that if this bar was to close up, move my target, look to the left to trade the right. Don't see any headway, so I just move them out of the way. Let's see, but if it goes below mid-band, would it be best to get out? Well, Mindy, on your question, yes, but keep in mind that when we missed the trade that we drew the line exactly, I've got to pretty much trust this as them trying to make that my swing. So I'm saying, well, I'd probably risk another 6 just in case if I was up fairly nicely on it. Okay. But if you want to, now what you could actually do if they do take this out at mid-band, just do like that. But you really wanted to get in right where my line was, and we were talking instead. Yeah, because otherwise that's $150. You're right. Okay. But also keep in mind that just like I was talking about with this phantoms, the way this is stair-stepping up, that you can trust these swings on these nice moves because you expect this to do a thrust, retrace, thrust like an ABC, and then this definitely needs to hold on a pullback. Okay. Now I wouldn't go nuts and just go like, 5 contracts here because the trade was down here, right where we drew our line. Okay, and since I was talking, I missed it. But let's see if we get another one. Now, just like I was talking about earlier, though, on this trade that was over here, that would have hurt you, double topped, you're seeing support right here. You're saying, okay, if it goes back above it, I'm going to take that trade. And like I say, if you check that 61%, you might have gotten the trade on this bar instead. But regardless where you got it, if you got it even when it went above resistance, the very second it touched it, and then it goes back down through it, you got to get out of that trade. Okay? Because in this particular instance, your thrust, retrace, thrust was all the way down here, and that's a pretty good lump. You've always got to look at the particular, chart that's happening at the time. If it's like 6 ticks down to a swing, and you feel that swing's going to hold, that's pretty okay. But if you took it like here and this swing is way down here, like 12, 14 more ticks, no, you wouldn't want to do that. Okay. But over here, see, this is actually not that much lower than mid-band. See there? Thrust, retrace, thrust. Always look to the left to trade the right, and you can see where you can put a stop and pretty much rely on it. Okay. Unless they decide to take it out. Let's see, Louis says, Gary, on fib on the last one, you put up look like 100%. Where do you make the determination exactly where the percentage is? Well, what you got to do, for one thing, you got to know that you've had enough of a pullback so that you can actually set a fib. Because let's say, for instance, that right here, you didn't notice that your fib here yet. Let's just kill this for a second. We don't care. All right, you don't know that at the time that this is your top until you get a pullback. And once you start getting this pullback where they're actually breaking micros and things, then you can do your fib. Because like I say, you don't know it's a fib yet until it actually starts breaking. But see, when that actually comes down and tests like say 61% or just right below it like that, that's not a bad little trade. And you can look for that trade. Okay? But just remember that don't try to get too analyzing on charts. It almost gets to be a feel and an art for it. And the thing is, you can't look at any one given chart and say that the next one's going to look exactly like it, because they don't. They're like fingerprints, but they do certain patterns continually. And this is what we look for. We look for a lot of these trades right around this line 2. Okay, especially if that was a 50 to 61% pullback. Okay, and this little trade here that we were talking about taking right here, you could put your stop right here. Yes. Just always look and see where that next level down is. If, for instance, this didn't make a swing, let's say this just went straight up and this was your swing, would you take a trade here and put your stop way down here? No. But when you can actually see it doing its swinging, you can usually pretty much trust it. See, this is your low and high identified swing on the left. This is your retrace, and you don't have identified swings yet, but it looks like it's getting a higher low to me. Okay. Now, what if you said, you know what, this thing's just flat going up. I'm going to take a chance on it. Okay. Well, if you do something like that, you probably want to at least box it in. Okay. So what I'd normally do in a case like that would be, just go ahead and do a region. You can see that you've got a little bit of resistance right there. If you draw a region, you're hoping to get up to at least 1509.30. I'd probably do something like a touch plus 1 or 2, something like that, and not let it even go back below this. If I was going to be trading, now see, because if you take this trade, that's too far down for that stop. So if I was going to take this trade, I'd pretty much put that like that. And if it gets me, it gets me. Okay? Because I'm not going to put that stop all the way down here, like underneath that swing and just have a hope and pray trade. Okay? And you can always look to the left, trade to right, and see a swing. This is an identified, well, it's an identified to the downside anyway. This is a little swing right across here. See where that is? That should hold also. See, that's like a support level over here. So you could put your stop just under there, but that's still 10 ticks. Okay, let's see if it actually worked and didn't even take out the bottom of our box. Looks like we're going to be okay. It's getting an identified swing, or trying to. Yeah, I'd definitely put that stop right there. Okay. Now keep in mind, there's times that you're going to get taken out of a trade, and if you've got multiple contracts on, 7, 8 ticks adds up. It'll start hurting you a little bit. Wow, we got targets on that stinking trade, didn't we? Could you take that again? What do you think? You want to box it? What was our rule before? Do we really want to box this trade? Let me just draw this real quick because I see a double top. See this top right here? Only taken out by 6 ticks. That's still, in my personal opinion, a double top, and they'll usually take this out. They won't take this out. And I'll bet you get a trade right in this area right here. And could you box it? And the answer is yes. So you hit your little region, you draw it, looking to the left, trade to the right, you got to swing right over here. So yeah, I'd definitely put that region like that. And then I'd move it down. See where that resistance is right there? And there's my trade. And I don't want to take this out right here. And lo and behold, we didn't. See there? So if you learn to draw on your charts like this and realize, always look to the left to trade the right, okay? And keep in mind that to get out of trades, you're going to want to take these little, for instance, if you had taken this trade here, see that stair stepping up there? Well, when did it stop stair stepping up? Well, some people even take it off when it takes out, if it takes out resistance here and then comes back down through it, you can protect your trade. You could also draw a trend line on your chart, like under those lows. If it takes out that trend line, take the trade off the chart. Okay. Anybody have any questions on this so far? Let's see, Louis, I'm not saying it can't take out the left. I'm saying it shouldn't. Because see, the definition of an uptrend is higher lows and higher highs. So if you look to the left and you've got identified areas and you're in a trend, they should hold. Let me go over that because you've got a real good valid question there. Let's kill all this. We don't have a trade. Let's get rid of all the lines. And let's look at this. All right. So basically right here, without drawing lightning 1 or 2 or even 3, try it with the mind's eye. Okay. So in other words, you had let's do like an ABC. So there's a thrust. All right. There's a retrace. There's another like A, B, C, D, whatever, but it's still a good thrust anytime they take out swing to the left. All right. So if you look at this chart right here, this is pretty much a thrust, retrace, thrust. So if you drew a line here on the left side of the chart and you're trying to take a long trade, that should not take out that. So this was a legitimate entry right there. See it? Above that swing, legitimate entry. And this is a legitimate entry if it doesn't take that out. Always look to the left to trade the right. Because when you see this on your charts in real time, you're gonna know in your mind's eye to draw that line. And if you get a higher low, you're more than likely going to be heading up. Okay? You want to try it again? Well, right now this is your looking to left to trade the right. Because they haven't ever given you a higher low that's taken out the high. Okay? So let's see if that happens. Let's draw it on our chart. All right, this is retracing a little bit. What says the team? All right, let's draw on our chart. This is not an identified swing, right? This is your identified swing. Is this a decent little area to box in with a higher low? Yes. So you could draw your little region and look to the left to trade the right. They haven't checked that swing right there. I would more than likely take that trade if it went right back above mid-band. Also remember this too, I want to show you this pattern that happens a lot. When you have a top that barely gets taken out and they take out your previous support, but you look to the left and they haven't taken this out, so you have your line on your chart, right? All right, you'll notice that what they'll do is they'll take out the previous support here. See, this is actually identified, but you've got to realize that when you get this and you barely take out a top like this is not what I consider as identified. Now, lots of times it will be, but this is definitely your identified swing on the left. Everybody see that? Because see how this had a top here, and that was easily taken out by 12 or 10, 12 more ticks, right? So this one was only taken out by like 6. 6 exactly, as a matter of fact. So when they do that, they'll usually take this out. They won't take this out because they're still trying to trend up. And you'll see that time and time again. They take this out, and then the next time they come down, they'll check it. See there? And they do that a lot. And if you draw on your charts like that, you'll find that you can buy the trade here, and you can buy the trade here. Okay? All right. So now with what I've taught so far, let's see if everybody can get the next trade. We're just going to let this thing go, whatever it does. This is about the time I got up and traded this, by the way, on Friday. All right, let's say that you're not in a trade right now, but you're wanting in a trade. See how that trend line's going just like that right now? All right, it broke, and it could have taken you out of your trade if you had been long. Now let's slow this down for just a minute, and let's look to the left to trade the right and see how we can trade this. All right, I'm going to get rid of all the lines on the chart, and we're going to draw on our chart. Looking exactly left, we've got a swing right there. Always check to see where it is in correlation with mid-band. All right, then you've got a swing over here to the left. And that's closer to mid-band, right? Predictor's actually saying you're not even going to come down this low. Predictor's saying right here. See where this little white dots are and everything on the predictor? So could you be ready to take this trade on a little box? You've got a candle up, a candle down, and a candle trying to go down. Could you box this trade? Yes. So you box it, right? And I would probably put it more likely, if it would come down here, like so, you could even turn this on. Just in case one of these actually, this is what we're looking for, but predictor's actually saying it should bounce here. So let's see which way it does, and we'll take it either way. Okay, now real quick though, this is a real good one because somebody's asking this. I can already see it. They're trying to articulate it. You got a thrust, you got a retrace, you got a huge move up without hardly any retrace at all. If you were to take this trade, would you put your stop all the way down here? No. No. Matter of fact, in a case like this, what I would do if it didn't at least bounce here off of 1509.90, I would probably take it off the table. If you want to see if you can get this trade, that's a candle up, candle down. So that's definitely like a little 1, 2, 3 reversal if it takes that out. And if it touches here, we'll also take it, but we'll put a really tight stop on it. Let's see what it does. Speed it up just a little bit. Looks like we're in. All right, we're going to put our stop nice and tight. It's right there under mid-band. Exit on close. Get one out of the way. One up there at the top. Ride your runner. And by the way, once you get in the profit like this, you know, if you happen to hit this like this, you can go ahead and go to break even on this. You can even set this to go to break even at 10 if you want to. But you'll find that hit quite often. You'll find that hit quite often. Now look what's happening right now. What does the team think? Well, if you weren't in a trade at all, does anybody see that you have a low here, higher low here? So let's get rid of everything again. Let's draw our lines. Got a swing right across here. Nothing else at all. And they've already checked the last one. So would this be a good area to try to enter a trade if it goes back above the line? Well, we just missed it, unfortunately, but it went back above the line. See it? Came down below it, popped back up through it. Looking to the left to trade the right is amazing because we knew it wasn't going to come down to here. Why? Because it would take out previous swing and it had a higher high. So you had a high, low, higher high. They can't take this out if they're going to continue up. Okay? So the thing is, what a person's got to do is they've got to realize that when you're trending and you look to the left to trade the right and you use your boxes. Now, we didn't get to talk as much about scaling in and things like that because I really wanted to talk about patterns and lightning 1, 2, and 3. All right. Now, if you were in this trade right here, all right, where could you put your stop? Anybody? Could you put it right there? Well, what you want to usually do is fade it just a few ticks, just in case they want to hold this as support. Okay? And it looks like they may want to hold this as support. See there? And then you just simply start, watch it, see if it's going to get a higher low again. Keep watching it. They wicked that, so I put my stop right in through there. And there you're out. Pretty much that's your swing, isn't it, right there? All right. Like I say, this is definitely not a bad way to trade. Now, where's another trade on this chart? Well, it just kissed a predictor. All right, this trade is on fire is what it really boiled down to. What if it takes that resistance out again right there? What do you think? Could you go ahead and take this trade with a very, very tight stop? What do you think? Well, a little late, but I would have taken it right there at that line. Put your stop nice and tight, just under that swing, and if it gets us, it gets us. So you see what I'm talking about, everyone, on this? They cannot take out the left side unless they're planning to head the other way. Okay? They just can't do it. Now let me show you where, we'll just fast forward this a little bit because Charles wasn't in the room here and I was. We just opened up the room. Remember where we took that trade even out of that white box? See how it just kissed it? Keep moving your stop. Move your stop. Just under lightning. Move your targets if you want to. You could take one off, obviously. You know, if you see something happening like that, you can take one off. Ride your runner. Stops just under the lightning swing. Stops just under the lightning swing. Nope, that would have taken you. Well, let's put it here instead. I think there we go, we're out. See the swing right here? That's where you definitely want it right there. But when it comes all the way up like that and then comes back to mid-band, you could have gotten out before that. We were going about 500 times, so that's a little harder to do. Now, does anybody remember what happened here on gold? You know, this is support right here. All right. And this is your lightning 3 right here. Okay. Now, if they decide to take this support out, could you actually short this trade? You know, for instance, could you box this in like we talked about in the room on Friday, except for the fact we did not take it here because that's a risky trade. See, they just bounced off support. See where I drew my line? Now they're breaking support. Could you be short on that trade? And the answer is yes. If it breaks this, you definitely want to be looking for shorts. Okay, let's see what it does. So let's say you were short here. We drew it. You could draw phantom even, decide if you wanted to short it. Now it just came down to support. It's trying to roll again even. Still bouncing off support. Now it's taking out support. Now what are we as traders looking for when it does that? If it takes this out with a good little vengeance, maybe 7, 8, 10 ticks. And by the way, you could definitely be short already on this. Kiss some resistance. Could you short that right up there when it kissed resistance, right at predictor? And if it kisses exactly the line, short it. See there? But let's say that you didn't get that trade. By the way, we called this particular trade in the room on Friday. This is a trade you want to train your mind to see, because when they kiss this resistance, where they broke support, it becomes resistance. Our background totally changes. Now, this could have still been an uptrend if this decided to hold, but it didn't decide to hold, and they took out. And of course, you would have put your stop just above that resistance area right there. Okay, but if you missed that trade, doing the same thing that we did the other way, can everybody see where you would literally be looking for another trade? And we'll draw it and see if you can see it also. All right. Get rid of everything. Look to the left to trade the right. We're now looking for shorts, right? So let's say that you weren't in this trade just yet. They just broke here. Got resistance right there. See a little thrust retrace, double top, little resistance there. So could we be actually looking for very possibly a thrust down, right? We got to get a thrust down. See how it just kissed that line I just drew? Could you short that there? Yes. But let's say that you're a little bit more of a conservative trader and you haven't taken this trade yet after we called it here. You got to wait for a retrace, right? Well, it definitely thrusted down. And we're going to take it if it comes back and kisses this line right here. Or that one. That's good to me. See there where it just kissed right the two lines that I drew? That's the way you do that. Okay, notice that you always want to draw two lines on your charts. Immediate left resistance on a short, vice versa on a long, and then your immediate price. So you look for two of them is what you do. Okay, and they need to be a little bit more than like this little bit here. That's not a swing there. Thrust, retrace, that tried to be a swing right there. So see, they tested it. Okay. And you can do the same thing on literally every chart that we have. Now, when you look at oil for Friday, to give an example, does everybody see that oil was in a range and it was not taking out those highs? It just wasn't taking them out. All right, let's say you weren't even in a trade. Not even in a trade. Can anybody see what you would have to get? I would draw on my chart, look to the left right there. I draw right here. That's above mid-band just a little bit. Let's see what they do. Predictor's saying right here, so I'm going to draw another line. Now you've got a swing right there. See if we can get in a trade. That looks like a good area to me. Just kissed it. Now keep in mind that if you see this in real time, notice, now if I was to take this trade like this right here, looking to the left to trade the right, I would put my stop just a little bit above that swing, because if this is going to change directions at all, it could take me out. Okay, because see, this is what you have right now on this chart. Basically, and that's not even hardly a retrace there at all. So it's really like pretty much this right here. That's the biggest retrace that we got. See, this was straight down. And looking to the left to trade the right, that is definitely my swing, and it should hold if it's going to head down. Now that's a little more iffy one. I like a little bit more oomph back and then a thrust. You know, your retrace being a little deeper. But since this was straight down, that's enough of a pullback that you can draw the lines. And this may even draw with lightning. Let's see. Yeah, see, it drew with lightning too anyway. So that's definitely a swing that they'd test. Okay? this is definitely the way to trade this. You can take this to the bank. When we draw on these charts, we're trying to teach everybody to see right where to draw on the charts. Try to get to where you recognize these patterns, but also realize that, it's not a magic thing that this is hitting midband here, but it is a magic thing that it's hitting exactly where you draw your lines. Because if you were trading this in real time, let's just close this out. We don't care. You were trading this in real time and you saw all this had already happened and they took out the swing, all right, and you looked to the left to trade the right, you would draw a line at that swing and you would draw a line at that swing. That's your two immediate left, right? And then when they come down, what do? They test them. So this wasn't magic that on Friday when we said box this in on gold, because it hit exactly where it was supposed to. Okay? And did this one hit exactly where it was supposed to? Yes. See there? This is the way this works. This actually can be the most beautiful way of trading that you've ever seen in your life. And keep in mind, if you draw too big of boxes, you're going to get whacked around. Okay, but if you draw at your resistance lines, and for instance, if this was to decide to do a phantom, what would it actually do? Well, it would not only be doing the phantom, it would be checking that line. See, but if it doesn't check that line, it's only checking the lightning 2, which is on the left side of the chart. Now, is this your lightning 2 on the left side of the chart? No. See, it barely took out the low. So this is your lightning 2 on the chart. They do a little zigzag up, check it, and roll over. Okay? Let's see. Does anybody have a question on that? Because we're about 3 minutes away. Let's see if I'm missing anything. How reliable are predictors? Well, Davin, on your question, I think predictors are pretty accurate, but again, what you really want to do, because predictors are actually looking at a little bit more minor swings, is to look at what you see in your mind. For instance, when we were looking at this one right here, we knew at that time, it had taken out support by a big amount. So if they were going to retrace, you got to kind of figure they're going to go here or they're going to go here. If they break what we call micro, see, that's breaking micro right there, and that's your secondary one right there. And that's also not only breaking micro, but it's breaking that resistance there, but it's also confirming a midband type rollover too. Okay? Let's see if that draws with lightning too. I bet it does. So you were stair-stepping back up. They roll over. Lightning 2. Yeah, definitely lightning 2. See it? Looking to the left to trade the right. That swing there and that swing there. All right? Everybody see that? And this does work quite well. The one thing I would recommend, though, is that if you're going to try something a little different, just like we talked about over here, when this was actually just heading up like a big dog. But if you try a trade and it doesn't work, keep this in mind, looking to the left to trade the right. You've got to see where the previous swing is that they haven't tested yet. So you got to swing here, for instance. You got to swing here and here. Like so. And so what do they end up doing? They test these swings. See, they almost got to that one, but they definitely got to that one. See there? And if you do take this trade, though, let's say that, you think, wow, this is great. This is a mid-band trade, and you take it when it goes above resistance, or remember that 61% retracement too. And let's say you take it on that bar or even that bar, just don't let it go back against you. Because like on that trade on oil on Friday, remember when Charles held it? It turned out to be a good trade, and he held it, but I just wasn't going to let it go back in that box. to me, $5 with Top Step Trader was cheaper than taking a chance that that was going to, take out the box and cost me $60, and ended up getting the trade beautifully anyway at 90. So, to me, it works out great on that type of thing. All right. Anybody have any final questions? It's right at 12 o'clock. See if I missed any. Let's see, Gary, when you drew the thrust and retrace, you said you wouldn't put your stop way down there. Wouldn't you wait for a phantom trade to be on the safe side? No, not necessarily, Louis, on your question like that, because, you're not going to always get phantoms. For instance, on this gold here, this trade right here that came down didn't quite get to phantom. This is still at what we call a deep bar probe, and all they were really doing was just testing a previous thrust, retrace, thrust, and that's your swing right across there, like so. And they came really close to it and gave you a higher low. So you can't always wait for a phantom. Mid-band trades are really, really good, but you've got to also realize that, there's occasionally times that they won't work out. And if they don't, you got to get out of them. Okay. But in the meantime, while you're checking that, also check and see where like a fib is. If you want to hold it for like a fib, to give an example, let's say you get in a little bit early, like on this gold trade here. Let's say you got in like right here and it hadn't quite got down to 61. Well, it did get to 50. That was a 50%. Remember, we checked it. So they just faked you is what they did. But when they fake you like that, if you actually put a limit order, to give an example, and you got long at 61%, but let's say you didn't see it and you just got long at resistance instead, and it goes up and it comes right back through resistance, that trade didn't cost you a dime, maybe $20 after fills, but it shouldn't have been a big loss. But what if this would have gone up and you held it and you said, okay, at the time, this is what you had. So let's say that you got in here and it goes up and you're in it and you say, wow, that's great. So I'm going to put my stop right here. See what I mean? You still got taken, see, because it took it out. Now, it didn't if you used exit on close, but I don't like feeling that much heat on, a trade simply because it broke the rules. The rule is that should have gone up. Now, another thing in your favor to watch for too is, when you get these red stealths, be careful when you box, because a lot of times they're going to go deeper. When you get a yellow bar probe that there's no red stealth, let me see if we had any on gold. See, here's one here with no red stealth. That one had a red stealth. That one didn't. See, if you don't get a red stealth, as a rule, see how this is just green? It's just, kind of going through stealth, but you never got a red stealth because it was still heading up. When they get those red stealths is when they start breaking and they're not heading up anymore. So you just got to watch for the retracement. Okay? I hope this helped everybody. I'll change the name of it. I'll figure out what to call it, but I don't think it was really using Object Trader so much to scale in and exit and all that. Okay, we'll do that again another time, but I just wanted to go over a little bit more of what I think people are seeing, and we're not going to get every single trade right, simply because you got to kind of get out of a trade. Don't let it, put in like 5 contracts and then give it a 20 tick stop, because on like one upper top step, you'll just blow your account on a daily basis. To practice fibs, Louis, yeah, you can actually practice fibs. For instance, if you wanted to, well, let's just see what gold's at right now, to give an example. This is a huge move right here, but see, this is actually, that looks like a 38% retracement to me. It might not be yet. This is a big move right here. 38%. more than likely they're done retracing, and they'll probably go up again. So anytime you get this, that seems like a lot of down movement, and it is. But all they did is come down and check the 38% retracement, and they'll probably take it up again. And if they do take it up again, could this be leg 1, leg 2, leg 3? We'll draw a line on the chart, and I'll try to save it, and we'll see if we can remember it. Now, keep in mind, they may do like a phantom and then roll over and check 50 also. But if they do this at 38%, and this is another leg up, this is where gold's heading. Can I show how it's 38%, Louis? Yeah. Let me show you real quick, and then we'll wrap. If you take this fib from all the way down here, keeping in mind that this is like a leg 1, leg 2, leg 3 type move, or at least a thrust, retrace thrust. This is just one big move also. Okay, so this is a 38% retracement from where it topped out, where it was bottomed out, and right where it hit on close on Friday, or about 11 o'clock or so. Okay, so with this being 38%, that doesn't mean it's going to go up though, because this trade is still going down right now, and we may have still headed down. That's just the 38%. Let's see where it went. Let's see if anybody can get one more trade, and then we'll wrap. Yeah, I definitely see it broke 38% with a vengeance. Look at that, kissed right at resistance. Kiss trades are phenomenal if you draw on your charts. Now, we couldn't take that obviously because I'm going 500 times, but see how they just do that continually? They just check it and check it and check it. We'll draw on our charts on Monday just like we do, and we'll see if we can all get nicely green. All right. Thanks everybody for coming. Hope you enjoyed it, and we'll see everybody on Monday. I would think with oil being a little bit more on the sideways side on Friday, I'll bet we get a good move on Monday or Tuesday on oil. But keep in mind, if you double top or double bottom and things like that, be very, very careful taking those mid-band trades. And if you do, get out quickly. Check your levels. All right. Thanks everybody. Have a great one, and we'll see you on Monday.